All right. So my name is Malik. I am a certified chartered accountant and founder and managing partner of Crypto Accountants, UK's first certified accounting firm in market since 2017. We have been assisting, helping crypto projects, investors, innovators, founders, DeFi protocols since 2017. Henry, can you hear me?
Perfectly.
Great. Okay, so today's topic is crypto taxes, demystified, gains, airdrops, staking, mining income, and so on. All right, so if you ever thought I didn't cash out, so there is no tax, HMRC disagrees. So do you think so? You haven't cashed out, but still taxable? Let's see how it is. It's no longer about whether crypto is taxable, it's about how. HMRC view of crypto, the new class of assets. So first we need to understand what's HMRC view of crypto asset. So crypto assets and similar digital assets are now recognized by HMRC as property, not currency. So it's not currency. So classification of these tokens are exchange token, stable coins, utility token, security tokens, NFTs, and so on. So for individuals, usually it is capital gain tax, and for businesses, it may be taxed as a trading income, so corporation tax. So crypto is no longer invisible, it's auditable, traceable, and taxable. So don't hide it. All right, so when taxes apply? It depends on taxable event. So when you transfer from your wallet to another wallet, for example, you transfer from your centralized exchange Binance to your MetaMask. Okay, so that's not a taxable event. Or you transfer to your spouse, that's not taxable. When it is taxable, it is taxable when you sell for cash, you pay for goods or services, you swap crypto, for example, from Ethereum to BTC, BTC to Chainlink, Chainlink to invest in some dodgy ICOs and then get lost, okay? Or you gift someone, except your partner. So if you have done 20 trades today or swap tokens today on a Binance, those are all taxable events. Okay. So if your exchange shows USD or USDT, HMRC wants everything in GBP. That is the key point. Okay. So most individuals is capital gain tax, not income tax. And how you calculate the capital gains based on the pooling rules and how pooling rules applies. For example, you have been buying Ethereum for last 6 years on a different prices, 200, 1,000, and then 1,500, 2,000, 3,000. So what you are going to do, you are going to add them up and average, take the average cost. So that is what called pooling rules. So for example, you're going to sell tomorrow for $4,700 on Ethereum. So your Ethereum average price will be, wow, 3,200 or whatever you have been buying. So you can deduct all the allowable costs, which means acquisition cost, gas fee, exchange charges, and so on. All deposits, again, must be valued in GBP. Okay, annual capital gain tax allowance now is 3,000, as everyone knows. The CGT on crypto is 18%, lower rate, and higher rate for 24%. So shall I be paying income tax or capital gain tax? Income tax applies when coins are earned, not invested. So when you earn coins, for example, I provide services to someone and get crypto in return. So that means I'm earning it. So it will be income tax rather than capital gain tax. And then if I hold those coins which I earned, okay, and hold those for a certain time and then sell it, which means I'm going to pay capital gain tax on top as well. Okay, so what comes as an earning? Mining rewards, staking yield, non-random airdrops, employer payments in crypto. So non-random airdrops, why non-random airdrops? In airdrops, these are tax-free. I mean, if you get some airdrop tokens in your wallet, that's tax-free. However, if you have performed work, that becomes taxable. So the rule here is, if work was performed, for example, if some project asks you to share on Twitter or Facebook or any other platform, which means you are performing something for them, and it becomes taxable, comparing to someone just send you some tokens and then that is all tax-free. Okay. All right, so if your company flip tokens daily, is it investing or running a trading desk? Okay, so frequently structured activity, it is trade rather than investing. So if you trade every day systematically through bots or you do yourself, that is under income tax, not capital gain tax. So which means you are a trader, not an investor. And for individuals, then income tax applies, and companies, corporation tax will apply. So if there is an income tax, there is no CGT allowance for trading profits. Business expenses may deductible if those are wholly exclusively for the trade. All right. So what's the treatment for DeFi, lending, and staking? Alice stakes 5K of Ethereum in a DeFi pool. HMRC says she's disposed of her Ethereum and received new tokens, 2 taxable events. One time when she locked her coins or given her coins in or Ethereum, and then second taxable event when she has got some rewards. So HMRC rule here is based on beneficial ownership. So if you give beneficial ownership to that DeFi pool or lending protocol or staking yield farm, which means you do not have a beneficial ownership of your coins, it means you have sold those coins. So it will be treated as sold. Okay. So if control is with you, it means it's not a taxable event. Only when you receive any income like staking or rewards, those are going to be taxable. All right, so nice JPG, yeah?
Yeah.
All right, so NFTs are same like crypto assets, not a special snowflake in HMRC. As tax depends on what you are doing with them. Buying or selling, same like cryptocurrencies, it's an investment. Okay. If you create NFTs and then sell, that is trade, that is your business. So income tax applies if you are individual. If you are a business, then corporation tax. Okay, but digital artwork itself is not taxed separately. You're only going to get taxed when you're going to sell it or when you're going to, it's not only when you put it on a blockchain, it means it's taxable, no. When there is a transaction happen, then it's going to be taxable. Right, so the most difficult thing is record keeping and compliance. Okay, someone once said HMRC can't track blockchain. 2 months later, they got a letter quoting their wallet address. Suddenly, their memory and their records improved dramatically. Yeah, and that's happened. A few years back, a client of ours said, HMRC can never track. When these are all decentralized wallets, but I told that time, all routes are going towards WASP. Okay, so whatever you are doing, you are keeping coins in decentralized wallets, everything you are going to send to some decentralized, centralized exchange and sell it. And that is the day, okay, of course, you are going to be in a tax net. Okay. So keep record of every trade, date, GBP, value, type, fees, wallet address, and everything, and hold on to it for 5 years. Even the disastrous meme coin ones. And remember, HMRC already gets data from Coinbase, Binance, Kraken. So forgetting your wallets is not the solution. Okay. So how to calculate your capital gain when you are having, say, more than 100 transactions or more than 500? We sometimes get clients more than millions of transactions. So easiest way is to use one of the tools like Coinly, coin tracking, recap, crypto tax calculator, and so many there are in the market. So how you do it, you connect your APIs or upload your CSVs to one of these tools and then reconcile it by yourself. If these are complex or if there are any warnings, it means either you have forgot one of the wallet or you have some transactions which are not matching. So that is where you need some crypto savvy accountants to help you. Alright, so crypto scams to watch out. There are many scams and there are different tax treatment for each. Bitcoin investment schemes, rug pull scams, romance scams. Okay, for example, if you forget your seed phrase of a wallet, or if you pretend to forget, okay, so HMRC still wants evidence. Okay. So you need to provide evidence to claim your loss relief if you have forgotten your seed phrase. And if there are tokens you invested in and there is no liquidity, you may be able to apply negligence value loss relief, which means you need to have, again, you need to have evidence, you need to show HMRC, in case they ask, of course, you need to show HMRC there is no liquidity, there is no value. There are thousands of NFTs, everyone's wallet, which is not any value. So basically, what you're going to do, you're going to claim negligence value loss relief. Okay, and then there are rug pull schemes, and special one is romance scams. Okay, so when you send someone coins in this scam, there is no relief. Sorry, because HMRC states yeah, you have intentionally done it. Okay, so you know someone, okay, and then you send him or her your Ethereum BTC or whatever, and then you lost it and now you're claiming it was a scam. Yes, it's a scam, but you send it intentionally. So there is no loss relief for romance scams. Even there is a tax. How there is a tax? because the day you send it, that will be treated as a taxable event. For example, you bought your Ethereum back in 2015 for $98, like I have done. Okay, so now you send someone today's value is around $4,500. Okay, so HMRC, or for the capital gain tax calculation, it will be considered like you are selling it today. Okay, so you will be taxed on $4,300 minus whatever cost is. Okay.
Romance is expensive.
Sorry, love is expensive, yes. Yeah. So, all right, so what's the future direction? Think HMRC can't see your offshore accounts? That is another thing. Many people are asking us, okay, we can hide wallet overseas. No, this is not the case anymore. CARF is already knocking the door. 2027, all data will get shared through OECD data sharing, and UK exchanges already is going to start collecting actually 2026, and HMRC already sending nudge letters to many people, and all these exchanges like Binance, Kraken already sharing data whenever HMRC asks. All right, so I'm not a HMRC agent, by the way, so don't take me wrong. But key takeaways are what's new in crypto. Crypto is new for us, but HMRC is not new. So if there is a profit, they will find it faster than you find your memes. Okay, so what are the key takeaways? Number one, you should know what are the taxable events. What are those taxable events? When you swap, sell, okay, or pay for goods and services. Those are the taxable events. And declare everything. Don't hide wallets, because one day it will come out. And HMRC has better data than you think. Thank you very much. Any question, or we all just pretending our lost wallets never existed?